Good afternoon, everyone. A very warm welcome to the analysis of GST Council's decisions, organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified chartered accountant, qualified LLM and LLB. He is the chairperson of the Indirect Tax Core Group of CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is the regular speaker of various professional forums on the key area of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now I request to Samisha to say a few words.
Thank you, Titli. Good afternoon, Vivek. Good afternoon to all the participants. Can you hear me, Vivek?
Yes, Amit.
Yeah, okay. So, welcome to this session, a very important one indeed. And there are a lot of things are there to discuss. And Vivek will later, will address all the queries that you might have at the end of the session. So, request you to, at the end of the session, you can unmute yourself and ask the queries. Uh, Meanwhile, Vivek, I request you to, uh, take us through the important changes that has come and also the impact industry wise. I mean, whatever the your views on the specific industry, request you to share those views as well. So over to you, Vivek.
Yeah, good afternoon, Samir, and all the participants. Thank you for joining us, and thank you for the overwhelming response to this webinar, which was conceptualized at very short notice. And thank you for joining on a weekday at 2 p.m., which is one of the peak hours of business. Thank you, Titli, for organizing this, and Will GST and the entire team of Tax Connect, Avik, Uttam, for making this a success. Uh, uh, Friends, this was a marathon GST Council meeting, which went on for 2 days, and rightly so. You know, GST is not merely a tax, it is a transaction and way of doing business. So almost on a daily basis, there are issues under GST. There will keep on being issues under GST and it would be addressed. So a lot of lag behind between the GST Council meetings would require that the next GST Council meeting, which will be held, would be a heavy one. And so this one was a heavy one. In fact, in the next month, July 2022 would be a GST month, because 18th of July 2022 or so, all the notifications would be published. Even before that, possibly 17th July night. And in between, we could see a lot of activity. So once the states keep on ratifying and approving these council minutes and notifying, getting their notifications ready, the GST Council CBIC would keep on issuing circulars, at least, I think. So a lot of activity in July 2022 to all the tax practitioners, for all the industry people who are practicing in indirect taxes. We already have seen a lot of activity in direct taxes. We are regularly publishing our Bulletin on direct tax VISTA. You have seen our analysis on 194 capital R TDS, 194 capital S TDS. So 194R would impact all businesses in income tax also, combined with it GST, and hence I say July 22 would be a hectic month for tax professionals as well as for tax professionals in industry and as well as in the profession and practice. So friends, this GST Council meeting primarily was revolved around 4 reports by 4 group of ministers. The most important recommendations which were accepted were of the group of ministers on rate rationalization. So rate rationalization group of ministers has primarily 3 agendas. First is to correct the inverted duty structure. Second is to rationalize exemptions. And third is to actually rationalize the GST rates. They have done the first 2 primarily in this GST Council meeting. The Law Fitment Committee has met in April 22 and now again in June 22. In April 22, the Law Fitment Committee could not decide on a lot of matters, which it finalized in June 2022, and almost all the recommendations of the Law Fitment Committee has been accepted by the GST Council. Therefore, now this rate rationalization committee, after 3-4 months, may work on actual rate revisions in GST. And now we all know the process. It goes through the Law Fitment Committee. So from your industry body, you have to apply to the CBIC law. It goes to the Law Fitment Committee. Only when the Law Fitment Committee approves it, then it goes to the GST Council and gets ratified over there, and then the notification comes. The other is the group of ministers is the group of ministers on taxability of online games in the nature of gambling, betting, horse racing, and casinos. Now, friends, I will tell you a small, in brief, because there are lot of points. I don't know in this 1 hour slot which we have for you, I will not be able to take also. I will tell you in brief. You see, let us take the example of horse racing because we were involved directly in this, dispute. Now, horse racing, what happens is, say 3 punters come together for betting on in case of horse racing. Punter A gives 100 rupees, B 100 rupees, C 100 rupees. It all gets accumulated, and thereafter the horse racing club, it takes out its commission of say 15%. So out of 300, it will take out 45 rupees as its service charges. Balance, it will put it back. And whichever horse wins, it will get, that person, that punter will get that 255 rupees minus GST. The question here is not whether this horse racing would be liable to tax or casinos or online betting and gambling. The question is what would be the value on which tax would be levied. Would it be on 45 rupees of service charges or the entire 300 rupees? If at all, how it would be paid? All of these are various questions. This committee in August 2022, the GST Council meeting would deliberate and finalize on the taxability of these items. As of now, it has been deferred. Next, of course, is the precious stone movement group of ministers, which has deliberated that those of you who are in this precious stones gems and metals, precious metals like gold, platinum, etc. industry over here. There was always a compliance issue as to what document would be carried by the driver of the vehicle when moving the precious metals from one place within a state to another place within the same state. So intrastate movement. Again, this decision has been left to the states because generally movement within the state is considered to be a state issue. As you have seen in case of job work in textiles and various other job works, the e-way bill requirement and generally for e-way bills, interstate movement, the threshold limit and all has been provided, delegated to the state. So each state would come out with its own rules going forward. And last, on IT and technology group of ministers, which recommendations we will discuss. Yeah, please also keep on typing your questions in the chat box, and we would answer all of them at the end of the session. So friends, to start with, I would do a sector-wise impact, but to start with general issues which will impact all of you. And the most important issue which will impact all of us is the amendment in GSTR 3B returns. That will be out for public comments very soon. So recently in, I think, November 2021, we have seen the Apex Court decision in the case of Bharti Airtel versus Union of India, wherein the Apex Court has actually upheld the constitutional validity of Circular 26, which says one GSTR 3B would be amended by the next GSTR 3B. However, even after this Apex Court's decision, in a welcome move, the Council has decided that GSTR 3B corresponding month can be amended. How and where the procedure of implementation that would be notified. Possibly it may not happen within a few weeks, but of course very soon it would be happening. Two very important issues, friends, in return filing. Very, very important. Very recently, I think 2-3 days back, for this celebration of the 5 years of GST, I was speaking along with the Chief Commissioner and the NASIN Director at a webinar of CII. And the Honorable Chief Commissioner, Madam, has pointed this out. And this is there in the minutes of the GST Council meeting also. Friends, be very, very careful in putting your place of supply on your invoices, especially in case of services and bill to ship to transactions. The Honorable Chief Commissioner has remarked that there is a big issue in place of supplies, and the GST devolvement to the states is on the basis of the place of supplies which you put in the GSTR 3B or GSTR 1 returns. So be very, very careful, because if you put a wrong place of supply, then the respective state would not be getting its revenue, because we all know GST is a destination-based and consumption-based tax. Similarly, in case of bill to ship to transactions, many a times we have seen, even now, for many of the MSMEs generally, in the beginning in 2007, we had seen very large corporates doing a mistake. In case of bill to ship to transactions, it is the bill to state which would be the place of supplies. There would be a back-to-back invoice from ship to bill to state again. I would not go into detail because there are a lot of points, but friends, we can discuss this offline with whoever is required. But place of supply is very, very important. That has been even minuted in the GST Council meetings. Another major issue which we have been flagging for long, many GSPs we have corrected who were not flagging it, and many ERPs we have corrected, specifically also the accounts department, the data entry operators who are, by data entry operator, I mean the person who is making the data entry of the bills in your systems. They need to be very careful in flagging and tagging the blocked credits. And that tagging of blocked credits would mean that you have to report it in table number 4D of GSTR 3B. Very, very important, friends. Again, we have, during one of the investigations in one of the clients, one officer was telling us very recently, and now it has been minuted in the GST Council meetings minutes also. So do not just charge off your ineligible credits or blocked credits. Please tag it and disclose it under 17.5 blocked credits in table number 4D of GSTR 3B. This was again come up as a big point going forward when GSTR 3B revamped comes for public comments. Another important issue which was minuted in this council meetings is on fake invoices. And we have discussed this also along with, in the highest forums in CBIC. In the backdrop of LGW Industries and Kundu cases by the Calcutta High Court, decisions were there. The decisions were specifically related to ab initio registration cancellation and corresponding denial of input tax credit to the recipients. Now, there is going to be some process. There would be a circular on fake invoices, wherein the demand, penalties, and the recipient's obligation would be clarified, and possibly an SOP would be coming on denial of input tax credit to the recipients of fake invoices or invoices where GST has not been devolved by the suppliers. In case the recipient is bona fide, thousands of cases are there across the country where bona fide recipients ITC is getting denied due to non-payment of GST by the suppliers. Now, this issue possibly would be clarified very soon, and some document may come out on this issue going forward. Next critical issue is the extension of the time barring period in non-fraud cases under Section 73 of the CGST Act. We all know that in case of GST, the time barring period for issue of notices is, in case of Section 73 non-fraud cases, 3 years from the annual return date. So for 2017-18 financial year, the non-fraud cases time barring period ends on February 2023 or 1st February 2023 to be precise. Or, that was staggered for 1 week. So February 2023. Now that is proposed to be extended till September 2023. The constitutional validity vis-a-vis Section 73, subsection 10 of this extension may be tested going forward. In any case, why they are wanting to extend this, you see, that is a decision which has been taken by them. However, in 99.99% of the cases, they always invoke misrepresentation, suppression, etc. But they want more cushion. Another extension of timeline for all those whose refunds are time barred. A very, very welcome amendment proposed. As a result of the Honorable Apex Court suo motu order in March 2020, as a result of COVID-19 pandemic, various notices, appeals, etc. time limitation was sought to be extended. However, Circular 157 clarified that this suo motu order of the Apex Court was not applicable on refund cases. Various courts ruled in favor of the taxpayer and said no, this Apex Court suo motu order also applied to refund cases. Now, the GST Council has proposed that the period 1st of March 2020 till 28th of February 2022 would not be counted in time barring period. So for refund for exports, as of today, if we count for exports, those exports which were made in July 2018 are still not time barred. You can apply for those refunds. For inverted duty, June 2018 refunds are not time barred even today, subject to the notification issuance. This is a very, very welcome and for exporters a very important move, which would also give rest to many litigations in this respect. Another one point on registration, now there would be risk-based registration. Physical verification, as you know, that has been already started for new registration. One important thing for new registrants, even large companies, they take new registration in names of subsidiaries and all. Be very careful now. You take a new registration and immediately do a large transaction. Now, this ITC, in case of a large transaction, immediately post registration would be under scrutiny. We all know that by the Finance Act 2022, Section 38(2)(b) has been enacted and would be notified very soon, which requires that maybe in case of new registrations, the ITC to certain extent would be blocked for certain period. This GST Council meetings, which has acted on the report of the Group of Ministers on Technology and IT, has proposed something of this order. Now, friends, another very, very important proposal by this GST Council meetings is in the case of recredits. Now, this was a major issue and we have been following up with the GST Council on this through various chambers of commerce, and this now they have taken cognizance. We were at pains to explain the GST department in Mumbai, but now I think after GST Council meeting, it is clarified and it would be notified very soon. Now, what has happened is that in many cases, in case of you are importing through advance authorization and exporting on payment of duty, you get an automatic refund. Or you get a refund on which you are not eligible. And finally, some notice comes to you, you pay off the refund with tax and penalties as applicable. Now there is no option of recrediting the ITC back to your ITC ledger. Now they have come out with PMT 3A form for such recredit. However, let us see when the GST network Yeah. So there was some, I think, issue in the voice which my IT team was telling me. I would go a little slow now. The clarification now is that PMT 3A would be the form by which this recredit would be done. Another important proposal in this GST Council meeting for exporters again is for risky exporters. Now, those who have suffered, they have really suffered badly on account of this risky exporters tagging. Certain exporters were tagged as risky exporters by the DGARM, and the process was defined in Customs Circular number 136, I suppose, wherein the local commissionerate would scrutinize the exporters' credibility and send a report. But even after the commissionerate would send the report to the DGARM, due to certain issues at the DGARM, it was not untagged. Then the DGARM sent another query for L2 suppliers checking, and so on and so forth. But the moment this exporter went to the High Court, within a matter of 1 or 2 hearings, the High Court had granted relief, and DGARM untagged the risky exporters tag. Now it has been proposed that this risky exporters tagging would be there, and in case there is a GST refund, there would be a system generated notice and system generated form RFD1 for the risky exporters, which would go to the jurisdiction officer, and the jurisdiction officer would then process the refunds on a case-to-case basis. In case of duty-free shops, now they can claim the refunds as a normal exporter, and that form 10 capital P, RFD 10P, that has been scrapped. A very important proposal which would be notified soon is in the case of reversal of proportionate input tax credit on the sale of MEIS scripts and duty credit scripts. We all know that duty credit scripts after 13th of October 2017 were exempt under GST. The moment there is a sale of an exempt goods, then it requires a reversal of proportionate ITC, at least for the common ITC. Now, the issue was there was no certain expenditure on this, and now Rule 43(1) would be amended by an explanation where there would be no requirement of reversal of proportionate ITC on sale of duty credit scripts. The question is not this. The question is those who have already reversed the ITC, what do they do? Our respectful and legal submission in this is that while we have to wait for the notification, in case there is a retrospective amendment, it's great. You can claim the ITC, or you can reclaim the ITC based on intimation to the department, because this collection of tax would be considered to be as violative of Article 265 of the Constitution of India in case of a reversal on duty credit script sale which was already done. GST tribunal would be formed very soon. Group of ministers have been formed for deliberating on the formation of the GST appellate tribunal. Till that time, as per circular, the cases which are appealable post the first appeal stage would be on hold, and the time barring period would continue to be on. There would soon be a circular on 17(5) of the IGST Act on block credit. Possibly it would clarify on GST reversals on scraps issue, scrap which has been generated from the manufacturing process, from the supply process. It may also clarify on issues related to ITC on construction works contract services post safari retrieve judgment by the Odisha High Court. Okay, interest. There would soon be a notification which would be enacting the retrospective amendment of the interest under GST, which would be applicable only in the case of ITC availed and utilized. The calculation and all that would be notified by such notification, or if it is a circular, in the form of a circular. However, friends, a very, very important point over here, a little away from the GST Council meeting, but very, very important, which we have faced now. It has been held by a High Court in an income tax case that, say, in GST also many times we take a call that if there is a liability for tax, we pay the tax and we say once tax is paid, there would be no interest on interest and the interest would be crystallized. Friends, in case an income tax case, I would not go into the detail because it is an income tax matter. However, the analogy is applicable to GST also. It has been held that in such a case where you pay the tax portion also would be first adjusted on the accrued interest. So on the balance tax, say for example, you paid the tax of rupees 100, which was due, but there was an accrued interest till the date of payment of the tax of rupees 40. Therefore, this 40 interest would be considered to be adjusted against this payment of tax of rupees 100, and on this 40 rupees of balance tax, interest would continue. So this is a very, very important judgment in an income tax matter, which would be applicable to GST, and going forward, once in case in business practice you take such calls, you have to be aware of this. A very, very important and awaited proposal by the GST Council in case of refund on inverted duty structure. I propose the decision of the Honorable Apex Court in the case of VKC Footsteps. The Honorable Apex Court, while it held in the case of VKC Footsteps that the refund of input services in case of inverted duty claims would not be available, yet it held that the formula under Rule 89(5) would require to be amended. What is that formula? It requires that inverted duty turnover divided by total turnover into net ITC minus tax paid. So in this tax paid, it was considered as per that formula that first you have to adjust the ITC on account of inputs and thereafter input services would come. But it's resulted in a lesser claim of inverted duty structure, and now input services refund was not available. Therefore, it is now proposed and would be notified going forward that the formula would be changed. The consideration of the utilization would be in the same ratio in which input and input services has been utilized, right? So it would not be input adjustment first and thereafter input services. You have to calculate the ratio in which input and input services credit has been taken. In the same ratio, adjustment of utilization would be calculated. In the case of goods transport agents, an important proposal which would be applicable, I think, from 1st of April 2023. Now, GTAs would be given an option to charge on forward charge mechanism at 12%, which is available with ITC, or on 5% or on RCM at 5% to the service recipients. Of course, that is without ITC. And this option can be changed year on year. As of now, there is no going back. The option has to be taken once only. This is a welcome amendment, and it would help the goods transport agents. Okay, motor vehicles for carriage of passengers taken by body corporates. Many a times in your organizations, you take the services of rent-a-cab operators either on rate basis or on time basis with petrol and diesel cost. So on rate basis, you take it, okay, how much kilometers your vehicle goes, it would be multiplied by a particular rate, say 10 rupees, 12 rupees, 15 rupees, and you would be reimbursed. However, sometimes this vehicle is also taken on time basis, that okay, we will pay you X amount for the whole month plus petrol diesel cost. The question was, what would be the rate of GST applicable on this time basis hiring of motor vehicles for carriage of passengers, and whether RCM would be applicable on this when the recipient of the service was a body corporate. It has both been answered. The rate of GST would be 18% and reverse charge mechanism would be applicable on motor vehicles taken for carriage of passengers on time basis also. In case of sale of land, where certain minor amendments was made to the land, like drainage, making the walls, tiling and leveling the land, etc. It was considered not to be as a part of the land, but a separate service. Now it has been clarified, and circular would be out very soon, considering this to be a part of the land. Similar analogy in case of leasing of land, it would be classified as leasing services and not a separate class. Ice cream parlors from 5th October 2011, they were considering themselves as restaurant and charging 5% in case of ice cream sold. But it was clarified on 5th October 2011 that the rate of tax would be applicable would be 18% and not 5% on the sale of ice cream by ice cream parlors, because they were considered to be as manufacturers of ice cream. Well, to add on to this was an issue that what happened about the low rate of tax which was already charged by the ice cream parlors before 5th of October 2011. We all were of the opinion, and I had even deliberated this, that we would see a clarification soon. Now this clarification has come in as proposed, and a circular would be out very soon stating that before 5th of October 2011, whatever is done is done. Let us not go into litigation on that. After 5th October 2011, the ice cream parlor should charge 18%. The question is whether the 18% itself, the circular itself, would be challenged or not. That is something which would be seen going forward. Transportation of goods to and fro landlocked countries like Nepal and Bhutan would continue to be exempt. There was a question on this. Electrical vehicles without battery pack were considered to be charged as normal rate on automobiles or 28%. That has been clarified that nothing doing. An electrical vehicle remains an electrical vehicle liable to tax at 5% and not as a normal automobile as 28%. There were various advanced rulings on this. Now all of that has been negated. A welcome move for electric vehicles industry. Mangoes. There are many who agree. So I will start with mangoes and I would take it as it goes because I'm following somewhere, my pointers in my paper. Mangoes, there was a question as to what about mango pulp, whether it would be applicable, whether it would be a mango exempt or whether it would be considered as a sliced mango or all other types of mango. It has been clarified that it will be all other types of mango under HSN 0804 liable to GST at the rate of 12%. Sliced mango is 5%. Fly ash bricks and fly ash aggregators, no more, criteria of 90% ash content to be there because it was very litigative, very confusing. Now, fly ash bricks, irrespective of 90% ash content, fly ash aggregators, irrespective of fly ash content, would be liable to tax at 12%. A welcome amendment. Purified water is liable to GST, but water just made safe for drinking is not liable to GST. The question is, it has been already clarified by a circular, still there was litigation on this. Question is, sewage water, whether purification and made safe for drinking, would that be considered as purified water liable to tax? It has been clarified that sewage water, of course, has to be purified to be made safe for drinking. It would not be considered as purified water, not liable to GST. A very, very important, it would be applicable, this development would be applicable to across the board, and it has gone without much notice. There would be a GST on renting of residential accommodation. I am repeating, there would be a GST on renting of residential accommodation, wherein the residential accommodation has been given to a business entity which is registered under GST. Even I have given one of my flats to a bank. Friends, if your taxable income, many of the directors, many of your employees of big corporates, they purchase the flat and give it to the corporate itself on rent. And no tax is GST is liable on that. Now it would be liable to GST. So your entire guest housing, HRA structure, your entire rent agreements you have to re-look into. In case your service provider, it would impact the employees also. So in case you as an employee, you as a consultant, if you are going above the threshold limit of GST, including this rent, then you have to charge GST when you are renting out your residential accommodation to a business entity, including your own organization. Hospitals, room where the per day rental is more than 5,000 rupees would be liable to GST without ITC, 5% GST without ITC. Hotels even below 1,000 rupees per day tariff would be liable to 12% GST with ITC, of course. Nothing has been said, so I assume it is with ITC. E-waste is GST is increased from 5% to 18%. I'm not going through all the increments in the rates or withdrawal of the exemption, but the important ones. Now, amidst this, a very, very important amendment for agribusiness. Somebody was asking me a question on the chat box in the very beginning on branded cereals, grains, etc. I will take 2-3 minutes to explain the history of this. Our analysis would be out, and I have already explained it in my analysis even day before yesterday when it was out in the media. So the issue is, in case of cereals, etc., which were not branded, it was exempt under GST. However, cereals, grains, wheat, rice, etc., which was branded, was liable to GST at the rate of 5%. However, in case the actionable claim on such brand was foregone by a declaration to your jurisdictional officer, then there would be no GST on this. There was a lot of issues. Some of the suppliers did not file their declarations with the JAO. Some of the suppliers says that, gentlemen, this is not a brand. Even unregistered brands were liable to this GST. So since they were not registered, they said, gentlemen, this is not a brand. And hence there is no actionable claim. The department was disputing, no, this is a brand. So there was a dispute. Now they will amend this clause and maybe create more disputes. The word brand would be amended and replaced by packaged and labeled. So in case of these cereals, grains, wheats, pulses, your rice, etc., if they are pre-packaged and labeled, the word is and, then it would be liable to GST. Otherwise, if it is sold loose, then it would be exempt. Now, there are various questions in this which would crop up. Now, even for the purpose of transportation, many of the entities, they package it and they put their own name of the company. Question is whether it would be considered as packaged and labeled or not. Maybe the final retailer would open the package and sell that grain loosely. Question is at the supplier's end, who has packed it in a package bag and put his label or just his name, would that be considered as packaged and labeled or not? Many other issues would again crop up, which would be dealt with possibly by a notification and a consequential circular on this. But as of now, such entities should gear up for this major amendment. Cut and polish diamonds due to the public opinion that diamonds were being made cheaper and grains were being made costlier by the government. Now they have re-increased the rate of GST from 2.25% to 1.5%. Works contract, services for construction work, for railways, metros, historical monuments, canals, dams, etc., provided to the government, state government, central government, local authorities, etc., would now be liable to GST at the rate of 18% or 12% as increased. This is done to correct the inverted duty structure. One item, we have seen that so many rate increases have happened, but one item on which rate has reduced is renting of goods carriage vehicle when cost of fuel is included. So renting of trucks, the GST rate is proposed to be reduced from 18% to 12%. So the truck owners, they can be happy on this ground. So many other rate increases for correction of inverted duty structure are there. LED lamps, printing ink, that is the first item, printing ink. Not only printing ink, writing ink and drawing ink also. The GST rate has been increased. Printing ink 12% to 18%, solar water LED lamps 12% to 18%, solar water heater system 5% to 12%. These are all to correct the inverted duty structure. Leather industry would be seeing some increase as far as the supply of prepared or finished leathers or composition leathers and the job work on the leather is concerned. So leather industry, some impact is there. Now, we have seen in the past, the accumulated ITC on textiles was considered to be as lapsed. And no inverted duty claims was considered on that. The ITC itself was considered as lapsed. The Honorable Gujarat High Court has held that notification to be ultra virus. Now they have come out with a similar, with product differentiation. Now in the business terms, we say no, you know, Horlicks, men's Horlicks, women's Horlicks. Same thing in a different package. So same thing in a different package. Now they have said for edible oils and for coal, there would be no inverted duty refunds, which would mean you would be okay to accumulate the ITC, but inverted duty refunds would not be available to you. And we all know under GST, it is very difficult to get it is impossible to get a refund of the accumulated ITC until and unless you have a separate supply against which the input tax credit can be adjusted. So old wine in the same bottle. There are many others amendments. Let me just see whether I missed anything before I take on the queries. Again, agri industry, various job works, machines for agri industry, for dairy industries, the GST rate has been increased. So for tour operators, if you are providing services of a tour between India and a foreign country, you have to proportion it between the value in India and value of the service given outside India. But again, there is a anomaly. They want to complicate it unnecessarily. We have to wait for the notification. They have said that this exemption to foreign tour operators would be available only if more than 50% of it is in India. So we have to wait for the notification in this aspect. For e-commerce operators, now for small e-commerce operators, they can start their business without GST registration, no mandatory GST registration till the threshold limit is achieved. Okay, last clarification which is supposed to come which I would discuss before I take the question. Now, friends, you have seen 194 capital R TDS in income tax, which will be applicable from tomorrow. Now, an amendment has been proposed. A circular would be coming out in GST also. We know in Schedule 1 of the CGST Act, where any gift is given to the employee free of charge till the value of the goods or services given to the employee is less than 50,000 rupees, till such time it would not be considered to be as a supply under Schedule 1. Now, many a times you give pick up and drop facility to your employees. Some of the time it is added as perquisites and liable to tax as perquisites under 17(2) of the Income Tax Act. However, many of the times it is not in the employee compensation. There would be a circular very soon on this, and my hunch is that if the value of such service is considered to be as more than 50,000 and it is not considered as perquisite, it would be liable to GST as a supply, and correspondingly, my hunch is that it would be liable to TDS under 194 capital R. However, let us wait for the fine prints. This is what I understand from this proposal which has been made in the press release. So I would take up the questions now in the chat box. By and large, these are the various proposals, clarifications, etc., which has been there in the press release. Okay, Mr. Deepak says pre-packaged and pre-labeled retail packs in terms of legal metrological act explanation required. So I have dealt with this in detail. Yeah, very important. Mr. Deepak has said legal metrological act. So one has to go through the legal metrological act and see whether the packaging and labeling is as per the legal metrological act or not. If it is as per legal metrological act, only then it would be considered as liable to tax. This is what is understood, but let us wait for the fine prints. Mr. Srikanth says it has been decided to exclude time period of this to calculation of limitation period with respect to refund claims. What step is to be taken in case refund claim has been rejected in April 2022 due to limitation period? Mr. Srikanth, now you can, since it has been rejected already and it cannot be refiled for the same period, you have to go in the appeal stage, but at the appeal stage, you can show this minutes, and in future, I think if it is notified, you can show them. Also, there are various High Court judgments of Bombay High Court, Madras High Court, West Bengal High Court. You can contest on these grounds. I am sure you would get the required relief in this case. Mr. Hari says, what about the e-way bill requirement for precious metal? For interstate, it is applicable. Okay. Mr. Sachin says, in case of deposit of export refund received due to deposit of export refund received due to non-receipt of export proceeds within limitation period as provided under FEMA is eligible for recredit of IGST. In case of deposit of export refund received, deposit of export refund received due to non-receipt of export. I think the question is relating to rejection of refunds. Yes, it is eligible for recredit provided your money. Yeah, it is eligible for recredit. Correct. Any criteria to decide risky exporters will be notified. They have not said so. So the criteria for risky exporters that should be with PGARF. But yes, your GST refunds would not be withheld. Well, problem is not only GST refunds. It is also with granting of RODTEP scripts under DGFT, MEIS scripts under foreign trade policy, etc. So many other benefits to exporters are also denied due to this risky exporters tax. GST refunds has been clarified and would be available going forward. This is only a part of the pay. Mr. Hari says if unregistered person giving his flat for rent to registered dealers, what will be the GST impact? Sir, if it is above the threshold limit, then you have to take registration. Mr. Chaitanya says, what if we are supplying in gunny bags which are generally purchased for manufacturing biscuit? Will it cover under packaged and labeling? Now again, this legal metrological act has to be seen in case you are packaging and labeling under legal metrological act, then possibly it would not be it would be considered as a supply. However, if it is not as per legal metrological act, this packaging and labeling, it would not be considered as a supply liable to GST. It would be considered as a exempt supply. Mr. Amin says the word retail pack has to be used. Okay. Sir, can you please confirm whether relaxation is given in terms of option field in 99C shall continue for 2021, 21-22? Mr. Galva, I don't think that relaxation will be there for 21-22. Now the 9 and 9C, they have been more or less streamlined, but let us wait for the notification. In the council minutes, they have only notified that 9 would not be applicable for those taxpayers with a turnover of less than 2 crores. However, in the media reports, day before yesterday, it was there that there would be some amendments to 9C, possibly all the exemptions or options for not filling up certain tables that may be taken away. From 18th June, work contract on roads, bridges, railways, metro, affluent contract will be chargeable at 18%. Yes, Mr. Ankit. It would be liable to 18% if the services are supplied to central or state government or local authorities. Mr. Indrajit Chakravarti says, is GST credit available for rent for residential purpose? Good question. See, this residential purpose, of course, it is for the sake of your business. It is for furtherance of business. Just because it is residential, it cannot be construed as not for the purpose of business. Because you are giving HRA, you are giving a house rent to your employees for furtherance of the business. So in my legal submission, the ITC should be available. Mr. Shettigar says, please once again explain the concept of letting residential flats or houses. As I said, if you are letting off the residential house or flats to a business entity which is registered under GST, then it would be liable to GST. Now, as of now, there is a blanket exemption for GST on residential properties, renting of residential properties. Mr. Raju says, suppose residential accommodation agreement entered by the company for its employees, then should the landlord charge GST? Yes, of course, from the effective from date of the notification, which I think should be 18th of July or 17th of July. Mr. Shrikant Somani says, with respect to refund claim, what if the refund line has already been rejected? As I said, you have to go for appeal along with this proposal and the corresponding notification of the council and the Madras, Bombay, West Bengal High Court decisions. Mr. Indani says, ink used in toner and cartridges rate to also be increased. Mr. Indani, yes, it should be increased. Yeah. Mr. Chaitanya want to know what kind of clarifications may be given with respect to 17.5. As I said, scrap. Whether ITC reversal is required for scrap or not, we know the Madras High Court in the case of ARS Steel R.K. Chettiar, Ganapati Chettiar has held that where it is a normal loss, it would be liable, not liable for reversal. Where it is an abnormal loss for abnormal factors, it would be liable for reversal. So this the construction ITC with respect to similar outward supplies, ITC with respect to works contract, with respect to construction and similar outward supplies. Apropos the Odisha High Court judgment in the case of Safari retreats. All of these are very critical issues which are under 17.5. I think all of these would be clarified. You can go to our YouTube channel also, where I have just released, and on VILGST also our video was there on the scrap aspect under 17.5, ITC reversal on scrap under 17.5. Is e-way bill required for movement of goods through hand? No. By non-motorized vehicle through hand, not required. However, for precious metals, the states would bring out the rules. Mr. Patil says restriction of refund on coal is limited to inverted duty structure, or is it with respect to accumulated ITC refund against zero rated supplies? I have a feeling it should be for inverted duty structure. Yeah, valid question. But let us see. I don't think for refund for exports it should be denied, because you have to understand the logic behind this, because the import duty rates were increased. So if you are exporting this again, then I think the refund should be eligible. However, let us wait for the notification in this respect. Mr. Sudhir says, what about ocean freight liability? That is settled by the Honorable Apex Court's judgment in the case of Mohit Minerals. No more GST on ocean freight. Yes, it was expected there would be some notification for deleting those provisions under the respective notifications 10 and 8 2017 IGST rate, but nothing has come. Let us wait for the final notifications. If for renting of residential dwellings where the landlord falling under exemption limit also needs to charge under GST, I have said no. Okay, whether proposed increase in GST for works contract to central and state government will be applicable for existing contracts? Yes, I feel it would be applicable on existing contracts also for supplies made post the date of the notification. Sir, for construction of road, it is provided that, not provided that services should be provided to government. I think it applies to all. Can you please confirm? As per my understanding, let me just see for road. Yeah, works contract for roads, bridges, railways, metros, effluent treatment plants, crematorium, etc. Yeah, you are right, Mr. Ankit. It is not specifically for central, state government, etc. It is for all roads. However, let us see whether it comes out when the final comes out, whether it is for all roads or only public roads, whether it is for supplies to central, state, local authorities, or all taxpayers or not. Yeah, valid point. Mr. Rahul says, please explore transportation of passengers where service received from a non-body corporate. You have to further elaborate your question. We referred to all decisions during reply to SCN for refund, but it was denied. Hope it will now be allowed at appellate levels. Yeah. What is the, Mr. Indani says, what is the change in e-waste? E-waste GST rate has been increased from 5% to 18%, Mr. Indani. Yeah. Yeah. What about GSTR 4 late fees? Yeah, there are some relaxations for late fees. You have to wait for the notification. Also, there was certain composition dealers where there was a negative balance in their cash ledger that was due to a system glitch. In fact, we do not have many such clients. So, one of the persons called me up and I was not aware of this. This has been clarified by the GST Council that this technical glitch would be rectified by the GST network very soon. Purchased material sold for lesser price. Mr. Ramakrishna, yeah, ITC should be available. There is nothing to deny this or reversal of ITC not required. Good question, Mr. Ramakrishna, though not relating to this GST Council meeting, but no reversal of ITC is required even if the goods or services are sold at a loss. RCM paid on transportation of employees is eligible for RCM credit or ineligible? Transportation of employees RCM paid, I think no, it is not eligible. Mr. Niket, whether GST is applicable for pulses sold by Miller in 30-50 kg bag without branding? Should be applicable if it is pre-packaged and labeled. Mr. Nath, final last question. How to transfer credit under Rule 54 capital A from the taxpayer to the ISD in the GST portal? I think in one of the other seminars few days back, the CII seminar, I have answered this. You have to raise an invoice from your normal GST registration to your ISD. It will get auto-populated in 6A of your ISD and thereafter it can be distributed by the ISD. That has been clarified under Rule 54(1) capital A. So thank you very much, friends, for joining this session. We would be having, once the circulars and notifications are out, we would be having another such session to discuss and deliberate in more detail whatever amendments have or been proposed to be made. Thank you very much. Over to you, Samir, and then Titli for closing remarks.
Thank you, Vivek sir, for this
So much,
wonderful
Vivek.
deliberation.
Thank you so much. Yeah. Thank you, Vivek, for patiently answering all the queries that has come up over the period of 1.5 hours. And as you said, a lot of things yet to be discussed, and largely will depend on the notification and circular ultimately issued by the CBIC. So we will again meet in the next month when the notifications are out, and we'll arrange for another important session then. So till then, it's all from our side. Thank you so much for joining us. And over to you, Ditli.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinar every month, and we hope we will get you in the upcoming webinars as well. We'll shortly share a video link to all the participants. Thank you.
Thank you. Thank you, Samir, VILGST, Team Tax Connect, and thank you all the participants for joining.